Did you know that by 2030, emerging markets will account for nearly 60% of the world's GDP? That's a staggering shift in global economic power. Despite this, many investors still overlook these vibrant markets, missing out on incredible opportunities. Emerging markets are like hidden treasure troves, brimming with potential. For instance, Africa's tech startup ecosystem is growing faster than anywhere else in the world. In 2021 alone, African startups raised over $4 billion in funding, a 250% increase from the previous year. In this video, we'll uncover the secrets of value investing in these dynamic markets. You'll learn why these regions matter, which sectors are set to explode, and how to navigate the risks. We'll also reveal some rising stars, top stocks you need to watch. Ready to dive into the future of investing? Let's explore how you can unlock incredible value in the world's most exciting markets. Buckle up for a journey that could transform your investment strategy. Chapter 1. Unveiling Hidden Gems: Why Emerging Markets Matter. Emerging markets are often overlooked by investors, but they hold incredible potential. These regions are experiencing rapid economic growth, outpacing many developed nations. For instance, countries like China and India have seen GDP growth rates above 6% in recent years, compared to less than 2% in many Western economies. Investing in these markets means tapping into industries and companies with enormous growth potential. Take Brazil's technology sector, which has grown by 20% annually. This kind of growth is hard to find elsewhere. Emerging markets also offer unique opportunities due to their youthful populations. Nearly 60% of Africa's population is under 25. This young demographic is driving innovation and consumption, creating a fertile ground for investment. Moreover, many emerging markets are rich in natural resources. For example, Chile is the world's largest copper producer, supplying 28% of the world's copper. This makes Chilean mining companies an attractive investment. However, the real allure lies in the undervalued stocks. Often, these markets are misunderstood or ignored by mainstream investors, leaving many stocks undervalued. This is where the value investor can find incredible bargains. A quote from Warren Buffett sums it up well: "Be fearful when others are greedy, and greedy when others are fearful." Emerging markets are often feared due to perceived risks, but this fear can create buying opportunities. For example, during the COVID-19 pandemic, many investors pulled out of emerging markets. However, those who stayed invested in companies like India's Reliance Industries saw their investments double as the company expanded its digital services. Investors should also consider the long-term potential. According to a World Bank report, emerging markets will contribute nearly 60% of global GDP by 2030. This shift represents a massive opportunity for those willing to invest now. Understanding the economic indicators of these markets is crucial. Look for countries with stable inflation rates, growing foreign exchange reserves, and increasing foreign direct investment. These indicators can signal a healthy investment environment. Moreover, diversifying your investments across several emerging markets can reduce risk. While one country might face economic challenges, others could be thriving. This strategy helps balance your portfolio. Chapter 2. The Untapped Potential: Sectors Ripe for Investment. Emerging markets are not just about economic growth, they are about finding the right sectors. Some sectors in these markets are growing faster than others, offering prime investment opportunities. Let's dive into a few. First, the technology sector. Did you know that Southeast Asia's internet economy is expected to reach $300 billion by 2025? Companies like Indonesia's Gojek and Singapore's Grab are leading this charge, expanding beyond ride-hailing into digital payments and financial services. Healthcare is another booming sector. As incomes rise, so does spending on healthcare. In India, the healthcare market is expected to grow to $372 billion by 2022, from $160 billion in 2017. Companies like Dr. Reddy's Laboratories are poised to benefit from this growth. Renewable energy is also gaining traction. China is the world's largest producer of solar energy, with over 250 gigawatts of installed capacity. Investing in companies involved in renewable energy in emerging markets can offer substantial returns as the world shifts towards sustainable energy. Let's not forget about consumer goods. As the middle class grows in these regions, so does their spending power. For example, by 2030, Africa's consumer spending is projected to reach $2.5 trillion. Companies that cater to these growing middle classes, like Nigeria's Dangote Group, are set to thrive. Financial services are another sector with huge potential. In Latin America, only 55% of adults have a bank account. This gap represents a massive opportunity for financial technology companies to offer services to the unbanked population. Brazil's Nubank, a digital bank, has already gained millions of customers by providing accessible banking services. Infrastructure development is also critical. Emerging markets are investing heavily in infrastructure to support their growth. For instance, India's infrastructure investment is expected to reach $1.4 trillion by 2025. Companies involved in construction and development in these regions can offer lucrative returns. Moreover, the agricultural sector shouldn't be overlooked. With vast arable land and favorable climates, countries like Argentina and Brazil are major agricultural producers. Investing in agricultural technology and companies in these regions can yield significant returns as global food demand increases. Chapter 3. Risk and Reward: Navigating Volatility in Emerging Markets. Investing in emerging markets can be a roller coaster ride. The potential rewards are high, but so are the risks. Understanding these risks and knowing how to navigate them is crucial. Political instability is a common concern. Changes in government or policies can affect market conditions. For example, in 2016, Brazil's political crisis led to significant market volatility. However, savvy investors who stayed the course saw substantial gains as the market recovered. Currency fluctuations are another risk. Emerging markets often experience higher currency volatility compared to developed markets. In 2018, the Turkish lira lost nearly 30% of its value against the US dollar. This kind of volatility can impact investment returns. To mitigate these risks, diversification is key. Spread your investments across multiple countries and sectors. This strategy helps balance the risks and rewards. For instance, while one market may face political turmoil, another might be thriving. Investing in companies with strong fundamentals is also crucial. Look for companies with solid balance sheets, consistent earnings growth, and competitive advantages. These companies are more likely to weather economic and political storms. Another strategy is to use hedging. Hedging can protect your investments against currency risks. For example, using forward contracts or options can help lock in exchange rates and reduce currency-related losses. Emerging markets can also be susceptible to global economic shifts. For instance, the 2008 financial crisis had a significant impact on these markets. However, they also tend to recover faster. By understanding global economic trends, you can better time your investments. It's also essential to stay informed. Keep an eye on economic indicators such as GDP growth, inflation rates, and foreign direct investment. These indicators can provide insights into the health of an emerging market. Additionally, consider working with a financial advisor who specializes in emerging markets. They can provide valuable insights and help you navigate the complexities of these markets. Understanding local regulations is another important factor. Each country has its own set of rules and regulations that can impact investments. For instance, China's strict capital controls can affect how you invest in Chinese companies. Despite the risks, the potential rewards can be substantial. According to a study by McKinsey, companies in emerging markets are expected to generate 40% of global revenues by 2025. This growth presents significant opportunities for investors. Chapter 4. The Value Investing Blueprint: Strategies for Success. Value investing in emerging markets requires a strategic approach. The goal is to find undervalued stocks with strong growth potential. Here's how you can do it. First, focus on companies with a strong competitive advantage. Warren Buffett calls this a moat. A company with a moat has a unique advantage that protects it from competitors. For example, India's Tata Group has a diverse range of businesses and a strong brand reputation, giving it a significant moat. Next, look for companies with consistent earnings growth. This indicates stability and potential for future growth. For instance, Taiwan Semiconductor Manufacturing Company, TSMC, has shown consistent earnings growth over the years, making it a strong candidate for value investors. Another strategy is to identify companies with strong balance sheets. These companies have low debt and high cash reserves, which can help them weather economic downturns. An example is South Africa's Naspers, which has a solid financial foundation. Pay attention to valuation metrics. Metrics like the price-to-earnings (P/E) ratio, price-to-book (P/B) ratio, and dividend yield can help identify undervalued stocks. For example, A company with a low P/E ratio compared to its peers might be undervalued. It's also important to consider the management team. Strong, experienced management can make a significant difference in a company's success. Look for companies with leaders who have a track record of making smart decisions and driving growth. Investing with a long-term perspective is crucial. Emerging markets can be volatile in the short term, but they offer significant growth potential over the long term. As Benjamin Graham, the father of value investing, said, "The stock market is a voting machine in the short term and a weighing machine in the long term." Look for companies that reinvest profits into growth. This can be a sign of a company poised for future success. For instance, Alibaba reinvests a significant portion of its profits into expanding its business, making it an attractive investment. Keep an eye on macroeconomic factors. Economic growth, political stability, and regulatory environment can all impact a company's performance. Understanding these factors can help you make better investment decisions. Chapter 5. Rising Stars. Top emerging market stocks to watch. Finding the top stocks in emerging markets can be like finding a needle in a haystack, but the rewards can be substantial. Let's explore some rising stars you should watch. One standout is Mercado Libre, often called the Amazon of Latin America. This e-commerce giant operates in multiple countries and has seen its stock soar over the past 5 years. Its revenue grew by 63% in 2021, showing strong growth potential. Another stock to watch is Taiwan Semiconductor Manufacturing Company, TSMC. As the world's largest dedicated independent semiconductor foundry, TSMC is crucial to global tech. With a market share of over 50%, it plays a pivotal role in the electronics industry. In India, HDFC Bank stands out. It's the largest private sector bank in India, known for its strong asset quality and innovative banking solutions. HDFC Bank has consistently delivered double-digit profit growth, making it a solid pick. Tencent Holdings, a Chinese tech conglomerate, is another top pick. It's not just about social media and gaming. Tencent is heavily investing in cloud computing and artificial intelligence. In 2022, its revenue from cloud and business services grew by 25%, highlighting its diverse growth avenues. Moving to Africa, Mountain Group is a leading telecom provider with a presence in over 20 countries. With the increasing demand for mobile and data services, MTN's growth prospects are bright. Its subscriber base grew by 11.1% in 2022, reflecting its expanding reach. Russian search engine Yandex is also worth watching. Despite political and economic challenges, Yandex continues to innovate in areas like ride-hailing, e-commerce, and artificial intelligence. Its revenue from new business segments grew by 40% last year. In Brazil, Vale SA, a mining giant, is a top performer. As one of the largest producers of iron ore and nickel, Vale benefits from the global demand for these resources. Its revenue increased by 32% in 2021, driven by higher commodity prices. South Korea's Samsung Electronics is another powerhouse. Known globally for its electronics, Samsung is also a leader in memory chips and display technology. Its investment in research and development ensures it stays at the forefront of tech innovation. Saudi Arabia's Aramco, the world's most profitable company, is a giant in the oil industry. With its vast reserves and efficient operations, Aramco continues to deliver strong financial performance. In 2022, its net income rose by 30%, driven by higher oil prices. Chapter 6. The future is bright. Long-term growth prospects. Looking at the long-term growth prospects of emerging markets, the future is indeed bright. Let's dive into why these markets hold immense potential for the future. Emerging markets are expected to drive global economic growth in the coming decades. According to the International Monetary Fund, IMF, emerging and developing economies are projected to grow by 6.3% in 2024, outpacing the growth of advanced economies. One reason for this growth is the young and dynamic population in these regions. For example, Africa's median age is just 19.7 years, compared to 38.4 years in Europe. This youthful demographic is set to drive consumption, innovation, and economic growth. Urbanization is another powerful trend. By 2030, it is estimated that 60% of the global population will live in urban areas, with most of this urbanization happening in emerging markets. This shift will create significant demand for housing, infrastructure, and services. Technology adoption is also accelerating in these markets. Smartphone penetration in India, for example, has increased from 21% in 2017 to 54% in 2021. This rapid adoption is opening new avenues for digital services and e-commerce. Sustainability and renewable energy are gaining traction. China, the largest carbon emitter, has committed to achieving carbon neutrality by 2060. This commitment is driving massive investments in renewable energy projects, presenting new investment opportunities. Education is another area where emerging markets are making strides. Countries like South Korea and Singapore have transformed their education systems, creating a skilled workforce that attracts global businesses. Infrastructure development continues to be a priority. India's infrastructure spending is set to reach $1.4 trillion by 2025, improving transportation, energy, and urban development. These investments will boost economic growth and create opportunities for investors.